Hey folks, Nikolai54 here on X Stock Twits, back with another video. Today, taking a closer look at the company that many investors believe could be building something much bigger than its current valuation suggests. And this is one I've been kind of beating the table with for a bit. AAGC, Hollywood Star Cuts, is the company and the ticker. This company is developing a scalable salon franchise brand. That's number one. Launching a retail hair care products line as we speak, updates to come, and they are expanding internationally. So doing all this while maintaining a clean balance sheet and no long-term debt, guys. So what makes this story especially interesting is that businesses like this often become acquisition targets once they reach scale. When is scale? That's debatable. So we will get into this and kind of talk through what it looks like. We'll break down kind of the business model, where it is today, the growth potential, the valuation, and the potential buyout scenario of this one. So Hollywood Star Cuts operates in it's a massive hair services, beauty industry, whatever you want to call it, right? That sector of business. The global hair care market is over $100 billion annually. Salon services in the U.S. alone represent around $60+ billion. I might also add that, this is kind of a recession-proof sector, right? Everybody gets their hair done, cut, whatever. That's usually something that just doesn't get taken out of the budget. Maybe a little bit slower to do so, but it gets done, right? The company strategy is pretty straightforward. Opening and franchising salons, selling proprietary hair care products, and we're going to be getting updates on this anytime now, and expanding internationally, which is interesting, right? So the company has over 20 locations today, with plans to grow over 30 locations by the end of 2026. So the power of the model itself comes from the franchising side. It allows for rapid expansion, and the company really doesn't need to fund every new location all by themselves, right? So another major growth driver is the company's new shampoo conditioner lines, which we've been hearing quite a bit about. Updates are coming via Twitter. We should hear something actually this week on that. Products are already moving into larger retail distribution space as we talk now in the United States, with the initial purchase orders already received, and we saw those on the last financials that were posted last month, right? So retail hair products can scale absolutely massively quickly, right? We will see. The proof will be in the pudding here as they put together the marketing plans and get that stuff, in the channel and out to the public. This kind of represents a couple of large, revenue streams: the salon side of the business and the retail product revenue. So what's the next stage? It's international expansion. So starting in the UK, I think we got a deal with this group over there for the initial 10 locations. We should be getting updates on this very soon. International franchising allows brands to expand globally, while local operators often fund, again, those location build-outs. We will be supplying, of course, decorations and things that make the brand the brand. But that is typically how this is going to go. Lower capital requirements, faster expansion, higher margins overall. So win-win win on that. Another factor investors are looking at with AAGC is the share structure and the balance sheet, right? So looking at where's the shares today? Around 1.8 billion. Very good for an OTC. I've seen better, but I've seen a lot worse, and most of them are a lot worse. No convertible debt. That is very rare in the OTC. You typically don't see no convertible debt on the books. Well, here we are, and we don't have any long-term debt. That's another big one. Most OTCs all have long-term debt sitting there on the books waiting to be converted at some point in time. We don't have to worry about that. Matter of fact, just the opposite. Because now we've got over 100 million shares bought back, probably around the 120 range. We're going to know here real soon. 120 million shares bought back to date. That's pretty big deal when, usually in the OTC markets, dilution is pretty common. Now we have a company actually buying back shares while, expanding. Kind of stands out to all of us kind of paying attention to what's going on. So if the company continues operating, or opening rather, 10 locations, 15 locations a year, The network could drastically grow to more than 50 locations. I know that's a goal that they had in mind in the short term. Think about each location averaging, let's say, $500,000 to $1 million in total revenue as we kind of build these out, and they've been in business a while, right? The salon network alone could generate 25 to 50 million annually. Couple this with the retail shampoo and conditioner line, scaling into the retail sector, going even bigger with additional POs. That could create another multi-million-dollar revenue stream that I think a lot of folks are missing on that side, right? This means AAGC, Hollywood Star Cuts, is building both a service brand and a consumer product brand simultaneously. So thinking about consumer service companies typically trade between 2 and 4 times annual revenue, depending on the growth and the profitability. If AAGC was generating $20 million in revenue, let's say, I think we're going to be there before you know it. Reasonable valuation range could be between 40 million and 80 million in market cap. So think about that a second, okay? So 40 million and 80 million in market cap. So with approximately 1.8 billion shares outstanding, that could be a potential share price roughly 2-4 cents, depending on investor sentiment and the growing expectations. Everything is really based on expectations. What's the possibility? What's the probability of something just growing and blowing up, right? Keep in mind, OTC markets is where all these startups, well, not where all, but where a lot of these public startups try to get into the space, usually to raise money to expand an idea. And we're not doing that at all. We're expanding an idea, but we're not raising money to do so, right? This thing has been a little bit of a slow go to get started with AAGC, but they have done it the right way. They haven't raised a bunch of capital. They haven't gone after dilutive financing. So we're in a really good spot with AAGC. In the salon industry, it's pretty common for larger chains to acquire growing brands once they reach scale. Man, I've been saying this, for a while. Why would AAGC come into the mix and start buying up shares of their own company? I think there's an exit strategy. Potential acquirers in the space, who could that be? Many people have asked me about that. Who do I think? I don't know, right? I have no clue. It's just an idea, but, Great Clips is pretty big. I get my hair cut there often, when I'm out. Supercuts, Sport Clips, right? Regis, private equity-backed beauty groups, potentially. So if AAGC reaches, let's say, 30 million to 50 million in revenue, acquisitions in the industry typically are around 2-5% on the valuation. So acquisition valuation, let's say that's 60 to 250 million. With 1.8 billion shares outstanding, that can imply a buyout price of roughly 3 to 14 cents per share, depending on final valuation and negotiated terms, right? So think about that a second. This thing could get acquired between 60 and 250 million dollars at some point in the future. Based on that valuation, we're looking at 3 to 14 cents a share. What is this thing? I said it earlier. What's it trading at today? We're in the trips, folks. So this is still in the early stages, of the growth story, let's say. But the company is definitely building out several key pieces simultaneously. Thinking about the scalable salon franchise by itself, the brand, the consumer hair care products. We're now internationally expanding, and the balance sheet is extremely clean with buybacks. If management continues to expand and execute, that's what it's all about. We've got to see it happen. AAGC could become a very interesting company to watch over the coming months and years even as this thing builds itself out. Keep in mind, we're in a $60 billion yearly sector. Huge. Right? How much of a piece of that could a new startup with a nice marketing plan, brand bring to the market, to the sector? It's different, right? We've gotten through the proof of concept stage with over 20 locations. It's building, it's growing, and we got a lot going on. So that's it for the update, guys. We have a lot coming from the company updates. It's looming right now. Product rollout. Where are they going to be? When are they going to be? We should know that real soon. We got the salons in California. We got that update coming. That's looming. We've got a UK update, I'm sure coming at some point, and the infamous audit, right? We're in the middle of a corporate audit. They've been working on that for quite some time. We should be getting close to completion, let's hope, on that one. And if we get that coupled with everything else that's going on, this thing's going to explode north in a big way. It's not going to take retail. It's going to be a different beast altogether when that all comes to fruition. Getting any shares near trips, I think, in my opinion, is going to be a foregone conclusion. It's just not going to happen. So let me know what your thoughts are. Put some comments down below. Let me know. Like the video, share the video, and I'll see you in the next one, guys. See you in the markets. Thanks. Bye-bye.